its real price can't be going up and down dramatically. And that's not Bitcoin. Bitcoin is all over the place in pricing. So I don't think it can survive as a unit of account. And then it won't have any value. So if it doesn't survive as a unit of account, it's not going to have any value. Not at all correct. So I believe in that. I believe in that strongly. The market is efficient as far as I'm concerned. So what does that say for my investing? Well, I still hold lots of stocks. I just hold a market portfolio.
I see.
So I think stocks have higher expected returns than bonds. So I'm willing to take the risk of the stock portfolio and hold it. But I think both the stocks and the bonds are correctly priced. I just think one has a higher expected return.
So if
you don't have to think the market's in, well, after the fact they are, once the information comes about. So I wrote my thesis on this actually in 1962. So basically it was that the distribution of stock returns is way too fat tails. There are too many extreme returns, both positive and negative. And you get these, they call them black swans now, that's a new name invented, but they've been there forever, that you have these outliers based on information that happen occasionally. So there's nothing new about that. It's a phenomenon that you face that at some point in time, almost for sure, there's going to be a big event, one way or the other, that pushes prices a lot. Well, it depends. So if people use it as a medium of exchange, in other words, they actually conduct transactions in it, then it could have value because then it is a type of money. Well, it's a unit of account. It's not really a type of money. You know, it's just a word, right? That we can give value to because it's usually in transactions and it's limited in supply. So in that case, it can have value. But the question is, will people transact in a medium like that has such a volatile value? In other words, what monetary theory says is a unit of account doesn't survive unless it has a fairly stable real value. In other words, its real price can't be going up and down dramatically. And that's not Bitcoin. Bitcoin is all over the place in pricing. So I don't think it can survive as a unit of account. And then it won't have any value. So if it doesn't survive as a unit of account, it's not going to have any value. And if people who invest, if people say they're investing in Bitcoin because other people are, watch out. It's going to crash. I don't know, but I don't. So I don't think, and I'm not sure that this isn't. I hesitate to say it, that this isn't a case where the market hasn't figured out that this thing has no value.
I see.
You know, we had a crash recently, right? I mean, all the prices of these things, some of them have died. Some of the lesser ones have died, and Bitcoin went down to less than half. So in the future, I think I would expect that to happen again, unless something happens to make its real value more stable. And so people are willing to transact in it.
Okay.
But now, at the moment, my guess is even the crooks don't want to transact in it and hold it. They'll probably transact in it, but then give it up quickly for something else because it's just too risky. Suppose I'm a business and you approach me that way. You want me to take Bitcoin. And I say to you, look, the problem with Bitcoin for me as a business is it can put me out of business in the sense that you give it to me and tomorrow its price goes down by 30% and my margin's only 10%. So I'm out of business basically because I took Bitcoin, not because I did anything on my business that was wrong. So this is just basically a statement of some principles from monetary theory that says you can't have a unit of account like that. It's not going to survive.
Okay.
Too variable. Long term, it can't be a store of value unless there's something that gives it value that isn't just people are willing to hold it. It has to have something in it intrinsically useful to make people willing to hold it. Otherwise, that whole story, it won't be a store of value very long. If it's just because people think it has value, that's going to blow up at some point. The speculation can go the other way and then you're out of business.
All right. What about gold? Do you think gold is an adequate store of value?
Well, gold has some of the same properties in the sense that it's a highly volatile, has a highly volatile price. So, you know, in the old days, I guess people transacted more in gold than they're willing to do now, because they have other mediums of exchange that aren't so variable in price. So people used to say gold was a hedge against inflation, but it isn't. It's a terrible hedge against inflation because its price is too variable relative to the prices of goods and services. Well, that worries me a lot, actually, because way back when the Fed started doing this quantitative easing business, I said, no, they're out of the business of controlling the money supply by controlling the amount of lending that banks can do because of limits on their reserves. Basically, reserves are unlimited now, and they're paying full market interest. So I don't know what's determining the price level anymore, because what monetary theory says is you have to have something that has an opportunity cost relative to other assets and is in limited supply. And that's not the case with reserves anymore. So I've been waiting for inflation to come along to see what would the Fed do. In the old days, what it would do is contract the supplies of reserves so that it get some control over the price level that way. But now it thinks it can do it by raising the interest rate on reserves and making people less willing to hold other assets in them, to do anything else because of the higher interest rate. But then the question is, how high does that interest rate have to go? So,
well, that's a good point.
Well, right. I remember that time very, very well. So that's right. So people have been shocked that they pushed up the federal funds rate from 0 basically to 75 basis points. But if you're running 8% inflation, 75 basis points is nothing. You know, you got, as you said, you got to get up there. You got to get that rate up to near 8% to make it work. Maybe. Who knows? This regime never existed before. We don't know if it'll work at all. Until we have any clue, any way to get hold of to control inflation. We really don't know that. And they don't know it either because they've never had to do it before. Oh, because this is the first time anybody ever tried to do it this way, that they had to come out of this quantitative easing business and raise interest rates to try to control inflation. No, we don't know whether that will work or not, or how much higher interest rates have to go to make it work. We just don't know.
Well,
well, here's the problem with that. See, Milton was right in his time in the way money was defined in those days. So in those days, you had two forms of money: currency and reserves. And reserves and currency were freely exchangeable, but the reserves didn't pay any interest. So they were just like currency, basically. But then when they started to do this quantitative easing business, they said, people won't, if we put in $3 trillion worth of reserves, when formerly we only had a couple $100 million, what will people do with these reserves? They won't want to hold them, so we have to pay interest on them. So now the opportunity cost of holding reserves went away. They pay fair market interest. And what that means is there is no meaningful concept of a money supply out there anymore. It's basically elastic.